Welcome back and another Talking Technical, and of course, plenty requests. I see most of the guys nowadays get our email address, and you can send it to Frans at fransdeclerc.com. We will probably pick it up there, and then from there we can always see if we can fit it in. But tonight we would like to kick off with a few local requests, but the first big one is Sibanye Stillwater. There's definitely a request for people that wants to buy the share for the medium to the long term. And if I look at this chart, just look at it. It had one massive sell-off. I just want to show you. From about March 2022, the share lost almost, you can say 30-40%, because it was trading at 75 Rand 33, and it's now trading at around 43 Rand 14, and the low was close to 35 Rand. What is the message here? The message is that if you've got a cyclical stock, the share can easily surprise you to the downside when it comes under pressure. And what do we see now? We see a beautiful rounding bottom. I like that. That looks positive to me. But on the other hand, there's the 200-day moving average sitting at 49.23, and only above 49.23 we can expect that some of the long-term investors will be keen to look at buying into the share. But there's something else that I do pick up, and this is the most important, is that we have a possible inverse head and shoulder here. There you are. You can draw it in like that. There you are. There's the left shoulder, tiny little left shoulder. Worked long on this head, and now we're busy working on the right shoulder. And the right shoulder is still developing. But on the other hand, below this line, I want to show you, below that little line there, that's the support. There you are. That support sits at 40.60. Below 40 Rand 60, this inverse head and shoulder will come obsolete. So some investors will then say, listen, it cannot be an inverse head and shoulder. It's probably just a base or a consolidation. Now, if you look at this chart, if you see since June this year all the way through, it consolidated below, the 200-day moving average, but it consolidated between 35.60 and you can almost say 45.45. And where's the neckline? The neckline sits at that 45.45. So if you want to participate in this inverse head and shoulder, the best is to buy above that 45.45. Make use of that stop loss of 40.45. And where's our targets? The targets, first of all, and this is what I like. The first initial target will take the share back to its 200-day moving average. And if it can breach that and turn that into a solid support, then what we can see is we can see the share advance even higher. And where's my target there? My target there will be, let's just do it, give you an idea. There you are. It can take the share all the way back to 52.82. So Sibanye is building a nice base here. But it's still below its 200-day moving average. And as we know in the past, a lot of investors will not touch a share unless it is above the 200-day moving average. In actual fact, I've mentioned this book many times before. It was written by Stein Weinstein, and the book was clearly how to profit in bull and bear markets. And they was 100% sure, well, he was 100% sure that you do not touch a share while it is below the 200-day moving average. Well, let's look at the giant, or it's not the giant anymore, it's Meta. Now, Meta, as we know, is that old Facebook share that everybody loved, and they are the big guys saying, now, as we know, Facebook maybe is still one of the most social platforms that everybody are using. But what we're seeing now is suddenly this share, it's been one of the top drivers of the NASDAQ in the last couple of years, are suddenly under immense pressure. Now, can you believe it that this share was in September 2021 as high as almost, you can say, $400. Now It's trading at $92. What is the big thing here? The big thing here is that if you have a share and you like it, and the share is performing well, like Meta did in past years, every result was just better, more subscribers, more advertising, everything was just in their favor. Suddenly, the trend has changed. Why? Look at this 50-day moving average, and I would like to show you. It moved above it from March 2021 all the way up to September 21. It was just bullish all the way. The momentum was to the top. You can actually see every time in the past it tested this line and it bounced off that. Then suddenly this 50-day moving average, by the way, the 50-day moving average is a favorite moving average used by medium-term investors. Now, what is a medium-term investor? A medium-term investor is usually somebody that invests with a horizon of about 6 months, maybe 9 months, and then they are happy to sit on the stock. But what happened? This 50-day moving average turned into a resistance. And it remained a resistance. We had that little blip there. But can you see, with that little blip there, I would like to show you, there wasn't just a blip, it also was a head and shoulder formation that showed there. There you are. There's the left shoulder, there's the head, there's the right shoulder, and that already warned the investors that something is not right. What happened? It consolidated below the 50-day moving average, and this is the crucial point. It rallied beautifully up. It's not the neckline only, but also the 50-day moving average. And what happened since then? Since then, the share lost enormous momentum. And where's the share trading now? Close to that $92 level. And what do we see now? We see a waterfall formation. A waterfall formation tells you that we will probably see a relief bounce sometime. But what's the important thing here? It doesn't help you to buy the top companies and believe that they will always perform. Sometimes they also fall out of favor and then the share gets hammered. Now, where's the first sign of strength here? I'm going to use that little blip there that we had as a resistance. The share will only first show me a little bit of strength above $100. Where's my stop loss at the moment? 93.16, and only above $100 I'll nibble at it. I mean, after that, there's plenty, you can almost say, levels there. And look at it on the candlestick chart. There's a beautiful gap that it will probably close, but this is a fundamental gap. This developed when the share shocked on results and it lost momentum. But this gap, by the way, is sitting between 102.50 and it will probably close one day at 128.53 if the company can return and come into favor again. This is it. Only buy above that $100, stick to that stop loss. You can also look at this maybe to close sometime in future. Let's look at Kroger. Now, Kroger is a massive company, was also under massive selling pressure. I mean, the share was in May 22 as high as $62, and it dropped all the way to $41.90. What a massive sell-off. But what I like about this chart, suddenly we see a tiny double bottom in the making. But now on the one side, if you see this double bottom, you will say, Frans, it's a buy. But it is a buy, but maybe we're all too late to buy it, because where did this double bottom came into play? It came into play when that little resistance, there's the spot, turned into a support. And that was sitting at $43.20. Since then, I mean, it went from $43.20 all the way up to $47.30. I mean, that's such a massive rally. It played out 100%. What's the beauty now? The 50-day moving, that's why I concentrate tonight on the 50-day movies, just to show you that you can sometimes use it as a wonderful tool. It rallied all the way up above that 50-day moving average. By the way, that 50-day moving average sits at 46.45. Now, what you do is, if you did miss the boat and you do like the company, then the best is to wait for it to come back, bounce off there, and then rally up. Then you can maybe look at buying the share. Look what happened in the past. It did the same. it rallied up above the 50-day moving average, it came back, and it bounced off there. Beautiful relief bounce from there. If you are a trader, it could have benefited you. Look what happened in the past. There's the 50-day again. Let's have a look here. It bounced up, tested, and from there, it fell all the way. So that's the bottom end. Look for that good buy keys, and then you can buy it and use a stop loss of 45.74 to protect some capital. Wow, let's look at Wesizwe. Wesizwe, that tiny platinum mine, was also being sold off all the way from there, 174, all the way down to, can you believe it, to 91 cents. And suddenly it had a beautiful relief bounce here, and it's trading above the 50-day moving average. What's interesting, look at it, it bounced from 91 cents to 108 almost in one go. But what do I look at? I'm going to use that old line of mine. I'm going to use that, and I will say I'm seeing a falling wedge developing here. There's the resistance line. There's the support. Beautiful test of that line. Once again, came back to test it. And for me, you may be a little bit late to buy now. 101. You had to buy it. Use a stop loss of, there's the stop loss of 96. But what's the best to do now? Wait for it to come back to test this line or test this 50-day moving average, and only then buy the share. But at least it looks like there's a little bit of a turnaround here. I like this sharp move. It tells me there were some keen buyers here. But always remember, it's not necessary to chase the share. It will always give you another opportunity to get in, maybe at a better place with a tighter stop loss, and only then you get involved with it. Don't just rush in. You really don't need to do that. Well, thank you for watching the show. Visit our website, www.fransclair.com, for more info, and we will chat again.